Okay, Nike. We are at $78.62 this morning. We're up 1.7% off of yesterday, which is a nice little bump. Bank of America and Morningstar both have this as a buy. CFRA has it as a hold as of October. I've been buying into this stock slowly and surely for the past year. Let's see here. 52-week range is 70 to 123, so we're on the low end still. We got a great dividend yield, 2.07%. The 200 simple moving day average is $87, so we're below that again still, even with this recent bump. They're consistent with their dividend and it's growing, so I love the dividend stocks. Adds to the compounding over time. Again, 52-week range. Morningstar fair value is $112. So that's great. That's right in the range of that 52-week range, so I think that makes sense. CFRA has a price target of 89, so it makes sense that they have it as a hold. I'd lean more towards the 112. Looking at the 1-year chart, they spent some time up near 125 within this calendar year. 5-year chart, 169, November of 21. So recent history, they spent a lot of their time in this average of the just under 120 range. So I think we're on the low end of that. So great buying opportunity. I think we're in a dip. You can see this downward pattern really since that high of 160 of 21. So they've had a downward trend. But I think this is a company that's been around, played a huge part in sports for decades. I mean, the moat on this is huge. Jordan Brand, Nike, the athletes they hold, just diving into the storyline a little bit. Earlier this week, Nike and the NFL extended their partnership through 2038. 12-year collaboration so far with them. They're the primary sponsor of the 2028 Olympics, coming off of having just done it this year, 24 Olympics. They have an option to extend through 2032. They've locked in their NBA contract in October for another 12 years. MLB contract through 2029. They got FC Barcelona and the Brazil football national team through 2038. Lifetime deal with LeBron James. They got Michael Jordan Brand. Cristiano Ronaldo's on a lifetime deal. 10-year deal with KD. Giannis, multiple-year deal. Serena, Mbappe, Simone Biles. 8-year deal with Caitlin Clark. Ja Morant's on a multi-year. So you can see they got a lot of forward momentum. Despite this small dip, I think they're locked in with a lot of key players across genders and different sports, through the middle of 2030s, so we've got a 10, 14, 15-year outlook of revenue, marketing exposure. I think those are really big advantages that they have. They add to the moat. I mean, they got 40% share of global athletic footwear market share. They do sportswear as well. Let's see here. Their market cap's $116 billion. Adidas is second place with a $45 billion cap. So they're well ahead of their competitors. No one's really close. Under Armour, $3.9 billion. And they're doing it off of only 79,000 employees, which I think is really efficient. Adidas has 62,000 employees and half the market cap, so they're being really efficient with their employees. That adds to lower cost of operations, obviously. Under Armour's $3.9 billion market cap with 16,000 employees, so their ratio is better, employees to market cap. They've had some recent key staffing changes. Monique Matheson retired in November. She's the HR director. They promoted from within. Treasure Hindley's been there for 12 years. I believe that's how you say her last name. She was the chief talent officer. They moved her up director of HR. So good to see him hiring within. Good to see people wanting to stay with them. Elliott Smith, obviously, is the big move. He just became the president and CEO recently. I think that puts them in a good position to have a pivot from this downturn. Don't really see a ton of room on the low end for them to go lower. I mean, at $78 a share with a $70 52-week range low, I really think we're on the low end, so there's a lot of headroom here for it to grow while you're collecting that dividend. What else we got here? In North America, $166 billion in retail sales. That's 18% in 2023 of the market share. That's far ahead of Adidas, which is 4.9%. In second place, Lululemon, who's been rising at 4.5%, is still way off of Nike. In Western Europe, you're in the same boat, 17.9% share of the market. Adidas got 5.7%. So they got a stronghold on those markets. Market leader in all overall sportswear. That includes, apparel as opposed to just footwear. They have 23% market share. They've got rising revenues in China, which is great. China's obviously they're in a bit of a economic turmoil right now, but they're a rising market, rising spenders. Their middle class has grown and has more spending capacity, and is starting to, approach U.S. as spenders and consumers. I think a unique play with Nike, which is really nice, is the high-end market play. They do collaborations with Louis Vuitton, and they sell for $3,000 a pair. They're kind of unique in that. Not a lot of other players do things like that in their sector. And as far as the dip goes, they've shifted their mission to e-commerce, direct-to-consumer sales. In my childhood, the flow was wholesaler to retail, Foot Locker, Dick's, Champs, and then those stores, it was all about getting prime real estate on those walls. Kids like me would go in and buy my basketball shoes. Whoever was in the best position, obviously I'm going to look at them first, closest to the front of the store, eye height. Nike dominated that for years. They've been slowly sacrificing that focus, which has led to a dip in revenues reported by companies like Foot Locker, and they've been shifting their sales to direct-to-consumer online, which I think long-term is the right move. I think we're looking at a company that's just shifting the way they operate, and that is what's creating this dip, which is really just a buying opportunity for us. I think the existential question is, do we think that Nike will be around in 20 or 30 years doing what it does with the brand that it has, representing, Olympics, NFL, NBA? I do believe they will. Obviously, that's an opinion and a forward perspective on where this is going, which you can never tell. There's risk every time you invest, but I think being on the low end, we've created we're in a position where there's a lot of margin of safety. If we drop from 78 to 70, or even a low like that, losing just a little bit over 10%, that's a risk I'm willing to take for the potential that they rise back to where they were, in the 130, 160 range. That's a doubling. With inflation over a 10, 20, 30-year period, we could be looking at, $200, $250 a share. Things like that in a forward perspective, and collecting dividends all along the way and reinvesting. That gives us a lot of compound growth. I'm bullish on Nike. I love Nike. I love the brand. I love Jordan Brand. I love the athletes that are coming up, the partnerships they have. Luka's on Jordan Brand. And I think this is a really good opportunity. Yeah, so look out at Nike. They're having earnings report in 3 days on December 19th. That'll be, I believe, the first earnings report under Elliott Hill. So that'll be a big one on like temporary market sentiment around them. Expect to see a little bit of shift. I think people are buying in now. We're seeing this 2%, 1.6% uptick, today. I think people might be starting to load in, expecting to see a positive earnings report on the 19th. So I think we're going to see a little bit of an uptick here, and can't wait to see what they have for an earnings report. Short term, it'll be nice to see if they've turned it around already. But I'm looking at this as more of a long-term play again, 20, 30 years. Is Nike going to be around? Are people going to be running in Nikes? Are kids going to be looking at athletes that have the Nike logo on them and buying it on Instagram or buying it on their phone or wherever we're purchasing things in 10, 20 years? That's my wrap on Nike. Click like and subscribe if you dig the review.